Danie, Laurel.
And I'm Jess De Los Santos. It's the start of a new trading day, but first, let's go straight to our top story. The country's factory output declined for the 9th straight month in November 2020. That's according to the Philippine Statistics Authority. Data from the PSA's monthly integrated survey of selected industries, or MISI, showed that factory output, as measured by volume of production index, slumped at an annual rate of 10.8%. This was lower from the contraction of 9.3% in October and 7.6% in November 2019. The volume of production has been on a decline since March 2020, when the national government began imposing lockdown measures to curb the spread of COVID-19. The PSA attributes the continued contraction to double-digit slump in the indices of 16 industries, led by petroleum products, tobacco, and printing. A similar composite indicator in the survey, the Value of Production Index, slipped by nearly 14% in October 2020 year-on-year. Union Bank Chief Economist Carlos Unchon said the latest data showed how the health crisis dampened consumption. In its latest report, IHS Markit said the country's factory activity continued to deteriorate in December, with the Purchasing Managers Index falling to 49.2 from 49.9 in November. A score below 50 indicates decline. Now then, moving over to the markets, all eyes are on the Georgia runoff over in the U.S. What's at stake and why should we care here in the Philippines?
All right, Jess. So officially, Wednesday, at least over in U.S. time, is going to be when the U.S. Congress will be declaring the official winner of the 2020 presidential election over in the United States. So markets are really bracing for that outcome because a lot are now hinged on the fact that Democrats may be controlling both the chambers of the Congress here. And you can actually see on my terminal here how that expectation may have been what was causing a rally over in Wall Street overnight, with the Nasdaq up by close to 1% and the S&P 500, the benchmark, up by 0.7%. Now, what's the implication if that does happen and the Democrats would be taking control? That could potentially lead, according to analysts, to an upward pressure on inflation and interest rates, as well as higher taxes to pay for fiscal aid. Now, recall that that would make fiscal packages faster to be approved if both chambers of Congress are, already in tandem with that, and also a pro-Democratic Party. Now, if that doesn't happen and either Republicans will actually win the re-election, the party might have enough votes to block any initiative that comes from the Biden camp. So another thing that's going on also in the U.S. is the tensions between U.S. and China that's even heating up even further. President Donald Trump has now signed an executive order banning transactions with 8 Chinese software applications. You've also got Alipay, which is part of that. This is according to a Reuters report. Now, just a quick check on how that is moving. Some stocks here does not seem to necessarily have a direct impact for the time being on the Chinese and Hong Kong shares. We're still waiting for them to open here in my terminal, but you can actually see them ending in the green yesterday, together with you can see the open of Japan, the Nikkei 225 up by 0.05%, but the Topix staging a good strong opening there, up by 0.6%. So it does seem to be tilted over in the green here. Now, I just want to take a quick check on oil. This is a commodity that we haven't been looking at for quite a while, but of course is very, very important when we talk about an economic recovery here. Actually, last night it surged by 50 a barrel, and you can see that opening right now, at least opening in the Philippines, that is $50.06 to 1 barrel. This is the first time yesterday that we've breached the 50 level since February. This is Saudi Arabia has now pledged to voluntarily cut the output by an extra 1 million barrels per day. Now, let's take a quick peek at our own equity markets here. we have had a 2-day rally, and that was halted yesterday. That's as of course we gave the inflation print that was higher in December than expected, the highest pace actually we've seen in almost 2 years, and it seems that negative sentiment is continuing over into today. That's down by 0.2% to 7,100 levels here. Jess, I just want to take a quick peek at our movers this morning, especially for the index players. You can see First Gen and a few stocks actually in the green, just 5 stocks there. But nevertheless, you can still see a lot of pain here going on. URC, the worst performer, down by 1.9%. I just want to take a quick peek at GT Cap. It's trading flat right now, but you have more on this news. But I just wanted to say how yesterday that was the worst performer, the biggest percentage loss in the Philippine benchmark index. That was dropping by 5.9%. Of course, amid these concerns that the car sales, especially with its Toyota venture, would be affected by these new vehicle import taxes. You've got more on that later on. So Rachel Cruz of AP Securities is cautioning against trading GT Capital for the time being. Now let's take a look at some quick, smaller stocks also hogging the limelight, so to speak. You've got ABS-CBN that jumped 18% yesterday, Jess. I'm curious to see whether that is continuing this morning, and you can see it still trading at 14 pesos and 40 centavos. Take a look at that, opening another 5.1% up. It's up by 23% now since the past 3 days. That's on the back of reports that Senate President Tito Soto has now filed a bill to give them another chance to have a franchise. Now, speaking of big performers, we've also got Veto Telecom. Now, Veto is also in focus right now because recall that there's going to be a technical audit that's going to be this month, and they need to pass that test to continue, of course, this franchise and this bid to be the third telco player. That had already climbed for 5 days. Some profit takers now, that's down by 5.2%, Jess.
All right, and one particular sector that we'll be keeping an eye on, at least for today, of course, the property space. That, of course, after POGOs scored a win, so to speak. Tell us more about the decision of the Supreme Court.
Okay, so very interesting pivot here. Just after we were worried that Pogos would be leaving, like you mentioned, they scored a major victory yesterday. The Supreme Court has now halted the government's move to tax the Pogos. Now, what is this? What is going on here? The High Court has now issued a TRO, which bars the DOF, so that's the Department of Finance, and the BIR to collect the 5% franchise tax, which they're supposed to be collecting on Pogos. Chief Justice Peralta has confirmed this to our news desk. So basically, this was in regard to Bayanihan 2. So they were Bayanihan 2, in order to provide stimulus, of course, in response to this COVID-19 crisis, was supposed to add this levy on POGOs. And they have said, basically, these are 14 foreign-based POGOs, having said that, this is not supposed to be a temporary relief measure. This is actually, imposing new taxes and not necessarily just fundraising for POGO. So this has now happened. It does appear that the property index is not necessarily moving this morning. That's down by 0.1%. But you can see Double Dragon, which does have a lot of POGOs as its tenants, up by 0.7% this morning. Now, sought for comment, you've actually got David Lichu of Lichu Property Consultants saying that this is a good decision to allow POGOs to keep on expanding. It is a good time for the property sector. The demand will be coming back. Now, just let's move back on that issue of still on levies and still on taxes here. You've got more on that decision of the DTI to impose duties on the imported cars. What would this mean for a sector that's already hard hit?
Well, that means at least if you try to ask the car manufacturers, there would be at least more bumps up ahead for the industry. This, of course, like what you mentioned earlier, the DTI deciding to slap provisional safeguard duties on imported cars. So what would that mean? That means that for the next 200 days at least, there will be cash bonds of as much as 70,000 pesos per passenger car unit, and at the same time 110,000 per light commercial vehicle unit. So why come up with this decision? Well, the Trade Department actually did a probe which yielded that domestic manufacturing was actually badly affected by a surge in imported cars. This, of course, stemming from a petition filed by the labor group Philippine Metalworks Association, which flagged the possible link between a surge in imported cars and the decline in local employment. Now, the DTI is saying the move can actually help protect local manufacturing and prevent car companies from leaving the country. But what are car manufacturers saying about this move? Well, you have Romel Gutierrez. He is a president of CAMPI. He says this could actually, in fact, lead to cutting the workforce even more for the automotive industries. At the same time, this might mean a government revenue loss. At the same time, they're saying, whenever we impose taxes, there are always concerns about how this might actually open gray market, and this is pretty much also one of the concerns here of Campi, that this might actually, lead doors or open doors for gray market or used vehicle sales. At the same time, they're flagging the probability that this might actually cause some uncertainty, especially when it comes to dealer expansion and parts localization here in the country. At the same time, in the short term, one of the effects that they are seeing here is a probable regional production disruption, and that there might also be possible retaliation from exporting countries. So again, more to your point, what might this all mean for the sector's recovery? Well, according to AVID, or the Association of Vehicle Importers and Distributors, it's not going to attract investments at all. In fact, it could further hurt the revival of the sector. Avid sales were down, in fact, by 42.6% as of October. At the same time as well, they're saying, it will not improve the country's manufacturing competitiveness, and that it will make it harder for Filipinos to actually afford personal mobility with a projected jackup in prices of units. They are instead calling for a long-term policies on ease of doing business instead of slapping these safeguard duties.
So a lot of pushback on those new levies. Just to add to that, I've actually got a AP Securities Rachel Cruz saying that this might cause, at least for Toyota, a 5% increase in the average selling price of all the imported vehicles that would be passed on to consumers. Or also us will be having an issue here in being able to afford these vehicles. Now we'll have more stories when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess De Los Santos. Annual inflation accelerated to a 22-month high in December, driven by a surge in food and transport prices during the holidays. Central Bank Governor Ben Jokno says the December uptick was largely transitory. Headline inflation came in at 3.5% in December, up from 3.3% in November when a series of typhoons battered the country. The Philippine Statistics Authority has noted spillover effects from November. Jokno likewise said that the December print reflects the short-term impact of the weather disturbances. He said downside risks to future inflation remain amid uncertainty brought by the pandemic on the global economy. Security Bank Chief Economist Dan Roses also agrees that December inflation is transitory, nudged by demand over the holiday season. He said this is good news for the economic managers who are banking on boosting consumption back. ING Bank senior economist Nikki Mapa said the central bank would unlikely cut rates further, although he expects it to keep an accommodative stance. He noted Bangko Sentral's higher inflation forecast for 2021, which could signal status quo in its main policy rate in the near term. Now, the country's rice inventory rose 6.6% year on year in November to the tune of 3.2 million metric tons. The PSA reported that stocks held by households rose close to 19% year on year, while inventory held by commercial warehouses fell almost 2% in November. Meanwhile, rice deposited with the NFA also fell 15%, even as the volume of the staple was boosted by the main harvest season. Based on the average daily consumption of Filipinos, the current inventory is sufficient for 99 days.
The Transportation Department has invited shortlisted Chinese consultants to submit bids for the Tagum-Davao-Digos segment of the Mindanao Railway project. Now, among the shortlisted consultants are the China Railway Design and Guangzhou Wanan Consortium, the China Railway Liu Yuan Group, and the CCCC Railway Consultants. Bidders must pay a non-refundable fee of 75,000 pesos along with their submission. The DOTR revealed that offers exceeding the approved 3.09 billion budget will automatically be rejected. The department added that detailed design and works must be completed within 17 months, while pre-construction activities must be finished in 33 months. Recall that the railway project is among the administration's priority infrastructure programs. However, the start of construction was delayed in 2019 due to right-of-way issues. It's a brand new year, but our expectations have been tempered. Here to share with us his revised outlook, we have with us Professor Emmanuel Leyco. He's an economist and also the president of the Pamantasan ng Lungsod ng Maynila. Good morning, sir, and welcome to the broadcast. Sir, I'm not able to hear you. Perhaps your phone is...
You're on mute, sir.
Yes, sir. Can we try that again?
Okay, my apologies.
All right, sir. Good morning, sir.
No worries, sir.
Good morning,
sir.
Happy New Year to you both.
Happy New Year. Happy New Year, sir. Sir, I wanted to kick off with the December inflation print. 3.5% versus 3.3% that was expected, fastest in 2 years. It's a mixed reaction here, with some saying that that was due to, supply issues, especially because of the typhoons. But on the other hand, you've got the economic managers saying that that's a good thing. It means that the economy is growing, consumption is picking up. What are we supposed to want to happen when it comes to inflation? Are we excited for a higher than expected print? Give us more insights on that.
Well, of course, everybody wants to see inflation numbers coming in within the range. And the inflation numbers finally coming outside the range, that is quite disturbing. And I would like to think, and I'm also just as hopeful as our economic managers, that this is a transitory period. However, we might be looking at more than a transitory period, because December is always always expected to be an opportunistic month. People are expected to buy more, to purchase more. People have more money during the month of December, but then if the production infrastructure of the country was not able to fill that in. And we also know that November, December, we always get typhoons. So that has already been factored into our inflation forecast. So the question is it because people had too much money and too little supplies in the market, that's why inflation went up? So I would be curious to see how our production, our GDP figured into this last month of the year. So I think we have to always take into consideration that's just one side of the total picture of our economy. Inflation only reflects how the market, the producers and the consumers come together and arrive at a price point. So we need to look at did production pick up? Did they anticipate renewed vigor among the consumers to come to the market with more money? Remember, they also had 14th month, they had 13th month, some of them got 15th month, but that may not be true for everybody because so many people lost their jobs. So we are looking at a picture where people with money, but there are fewer of them during the regular time. So, for example, if there were 10 million people before with jobs, now we only have 8 million with jobs, and then they had a little bit more money, but there are too few to buy in the market. That is very disturbing.
Okay. Sir, can you relate this with the fact that Governor Diokno has signaled that there is room for further cuts even as inflation is picking up, and we're already at an all-time record low with negative interest rates already on the horizon, and possibly no longer, as you mentioned, a transitory period. How does this bode well for an economy that is trying to grow and also trying also for the interest rates to keep up with inflation?
I think it's great that interest rates are remaining low, but we need to monitor how interest rates are being used right now. So, are people investing in new projects? Are people doing more capital investments, or is the market basically changing, replacing expensive loans with cheaper loans? So, if that is the case, that is not productive. What we would like to see is a stimulus that will produce more in the market, more output, stimulate the manufacturers. But if this is the case, it may not be the kind of expectations that we would like to see. So, and I think it has been brought to the discussion that monetary intervention alone is not enough. We need to put more stimulus, more packages for the producers and the consumers to stimulate the market to be more vibrant. Uh, and practically speaking, I think if we look at the component of our economy where consumption represents almost 60% or more of our economy, I think that is a good hint already for us. We have to put money in the pockets of our consumers. And right now, joblessness, unemployment, underemployment is not helping. We need to put more programs that will create jobs, or even put more money, no, in terms of ayuda, no, to the pockets of our people so that they can buy more, and then create incentives for our producers, particularly in food production, to be more active in the market.
All right, Professor Leyco, speaking of stimulus response here, of course, the latest strand would have to be the DTI slapping additional levy, at least, on imported cars. And at the same time, you have this bit of news with the Supreme Court also scrapping taxes for POGOs. How do you think might these affect the recovery of these sectors?
That would be a big problem for everybody, and particularly the government. The POGOs not being taxed will cut into the revenues of the government. So, how can they provide stimulus package for the economy when they are running out of money? They might have to do more borrowing outside, and that will not be good in the long run. Also, it will not be good for the local economy, the local car manufacturers, because the more you import, the more they replace products that can be produced in the local, in the domestic market, the more joblessness, the more unemployment is created. So that's not good in general. In the long term, I think will even be worse. Right
So
now,
can I
cars
just
are coming in cheaper, but who's buying cars now, particularly in this time of the pandemic? People are holding back. They want to they want to be sure about what's to come in the near future. Is the vaccine going to be rolled out smoothly? Is the vaccine going to be available to most of our people.
Sir, I'll just follow up on what Jess has asked and what you mentioned that we need more ayuda. But at the same time, getting that ayuda would mean possibly getting taxes, and as you mentioned, levies will also affect those sectors, especially sectors that are in bad need for recovery. What's it gonna take for these battered sectors to recover? I mean, how are you going to get craft the stimulus, especially since Sonny Dominguez of the DOF has already said they're going to maintain fiscal discipline?
Oh, I think it's always good to maintain fiscal discipline. However, we have to also take a look at where our money is coming from and where our money is going. And let us not forget the major segment of our economy comes from consumption. If consumption is stifled, I think that will create more problems for the economy. So we have to source out where do we put money, or where do we source the money that we will put in the pockets of our people. Is it by ayuda, or is it by more employment, by creating more employment? I would favor more employment. But I think you have to also take into consideration what kind of stimulus are you going to provide our employers, so that they will be able to employ and give proper salaries to our workers. This is not just going to be a one hand affair. You need to work with all our hands, all the players in the market, in the economy, so that we will be able to have a more comprehensive response to a major economic crisis that we are facing right now.
Okay, Professor Leyco, one of the major indicators as well that we took a look at this week, or at least we focus on, would have to be, of course, a factory and a manufacturing output in the country contracting yet again in December. Compare that to the rest of ASEAN and to the rest of Asia, in fact, where a number of countries already experiencing some level of recovery here. What do you think is it going to take to somehow stimulate the industry, and how much of that would actually hinge as well on the development of a vaccine?
I see PMI more as an indicator of how optimistic our producers are. If they are optimistic enough, I think they will put in more orders and plan more for their production. So, given the kind of environment that we have right now, where the pandemic is really still very much upon us, mobility of people, mobility of our workers is still very much affected. So, how can factories fully mobilize its workforce when their workforce are having trouble coming in to the workplace? How can manufacturers, how can producers be optimistic when from time to time they have to lock down and do disinfection because there was an outbreak in the workplace? I really think that the pandemic is a major factor in stimulating our economy, and how we manage the pandemic will be a major stimulus to our country. Of course, we need the short term. You provide ayuda, you create jobs, but you need to be able to mobilize the workforce. You need to be able to stimulate our producing sector. And at the same time, overall, we have to provide the kind of optimism that the people need, both buyers and producers in the economy, to to see the Philippine economy growing at par with the rest of our neighbors. Vietnam, my goodness, is not talking about contraction. Vietnam is talking about how big their growth is going to be next year. Our next door neighbors are talking about, well, except Indonesia, but the rest of our ASEAN neighbors, they're talking about growth. In our case, we're talking about recovery. So right now, I would be very, very curious about how the 2020 GDP will come out, particularly the last quarter.
Okay, so no excuses. Their resources are there. It's just a matter of the equitable distribution of those resources to stimulate demand. Thank you so much for those insights. That was, of course, Professor Emmanuel Leyco of the Pamantasan ng Lungsod ng Maynila. Maraming salamat, sir.
Maraming salamat po.
And that's a first look into the business day. Today is Wednesday, January 6. I'm Danie, Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.